Welcome to this WTR Small Cap Spotlight Flashcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's Flashcast podcast episode, I'm being joined by my consumer equity research colleague, Doug Lane, to talk about the recent introduction of the WTR Consumer Index that we now publish monthly. The index is comprised of 90 stocks across numerous subsectors within the consumer space. Good morning, Doug.
Good morning, Tim.
Doug, how did you select the names that go into the WTR Consumer Index?
No, that's a good question. We gave it a lot of thought. We came up with 90 companies in total that are comprised of 6 sub-indexes with 15 names in each. And these are mostly small and mid-cap stocks, which is really where WTR focuses, as you know. Also, I tried to pick companies that trade on PE ratios, since we also like to track valuation changes along with the price performance. And also our index is equal weighted, since most investors aren't really concerned whether they have $100,000 invested in a 100 million market cap company or $100,000 invested in a $10 billion market cap company. So making money, the math is the same. So let's go over the sub indexes. I think that might be insightful into where we're really focusing our efforts these days. So the first one is consumer staples, and these are consumer non-durables, your traditional food, beverage, household products companies. The biggest name in the sub-index is Molson Coors. It's around 10 billion in market cap. And the smallest is Edgewell Personal Care, just under $1 billion. And again, all these numbers I'm going to talk about today, Tim, are as of July month end, which is the last time we ran the index. So our second sub-index is consumer durables. And these are household products, but with longer life cycles. So the largest here is home appliance maker Shark Ninja. It's 16 billion in market cap. And the smallest is a kitchenware company, Lifetime Brands. It's just under 100 million market cap. So another area we went was outdoor and leisure. And these are goods and services for outdoor and leisure activities. So the largest names here are Vail Resorts, which operate mountain resorts, and Acushnet Holdings, which, as you know, has the Titleist and FootJoy golf brands. And both of these companies are around $5 billion in market cap. The smallest one in this space is American Outdoor Brands. It's the spin out of the non-firearm brands from Smith & Wesson, and it's about $100 million market cap. Another niche we like to follow is direct-to-consumer. I've been spending a lot of time in this space over the years, particularly with direct sellers. But these days, direct-to-consumer is really an up-and-coming channel and one of the most attractive in the space. So the largest here that we have in the index is a company called Hims and Hers. Now it's about a $12 billion market cap, and it had a really good year, even though the August is not turning out too well for it, but it's still up pretty good for the year. The smallest in the direct-to-consumer space is Medifast. It's a weight management company. Medifast has the Optavia brand, and it's about 150 million market cap. Another place we like to go is apparel and accessories. A lot of interesting names here in the small and mid cap space. The biggest one we follow is 8 billion in market cap, and that's Levi Strauss, the famous jeans company. And then the smallest is a company called Lakeland Industries, and they provide protective solutions to workers, such as first responders and those who work with dangerous materials. And Lakeland has about a $100 million market cap. Another area is premium and lifestyle brands. Now, these are some of the larger market cap names that we follow in the index. I mean, we have beauty giant Estee Lauder in here at 33 billion market cap, and we have luxury furniture and home decor provider Williams-Sonoma at 25 billion market cap. But we also, again, have a wide range of market capitalizations in this sub-index. We also have premium watchmaker Movado Group and luxury fashion group Lanvin Holdings, both with market caps around $300 million. So as you can see, Tim, we try to cover a pretty wide swath of the small and mid-cap consumer landscape, sometimes inching up into the larger cap names, particularly in the premium and lifestyle brand subsector.
A lot of household names there you just mentioned. So Doug, WTR started publishing its consumer monthly report in June, and I know the third issue just went out 2 weeks ago. What can you tell our listeners about how consumer sector equities have performed so far in 2025?
Yeah, 2025 has started out to be a pretty rough year. So far this year, and again, these are through July, last time we ran the index, it's down about 12.4%. And the drivers behind the decline in the index are twofold. There was a 3.8% decline in prospective earnings. I look at 12-month prospective earnings in my valuation work, but there's also been a 1.6x contraction in the prospective PE ratio. So earnings have been under a little pressure, and market sentiment to the group has become more cautious. To put it in perspective, our consumer index came into the year trading at 18.1 times 12-month prospective earnings, which was a 16% premium to the S&P Small Cap 600. Now let's take a minute and talk about that because we do like to compare it against the S&P Small Cap 600 and use that as our benchmark since it covers a market cap spectrum closer to the companies we work with. And it seems to be a more realistic valuation benchmark as well versus the S&P 500, which is traditionally what I use, but it's been trading at such a premium valuation recently, it doesn't really seem to be appropriate for the sort of mainstream small and mid-cap companies that we follow. So currently our consumer index trades at about 16.5x prospective earnings. It's still a 4% premium to the S&P Small Cap 600, but it has underperformed this year, down from the premium the 16% premium that it came into the year trading at. So if you look at the S&P Small Cap 600, it's only been down about 4.5% through July. So looking at our sub-indexes, the best performers have been premium and lifestyle brands and direct to consumer. Both are down only around 3% so far this year. So it's down, but not as much as the index or the S&P Small Cap 600. And it really fits sort of the themes we've been hearing in consumer. We hear about a bifurcated consumer where the high-end consumer is spending fine, but the low-end consumer is getting squeezed. So having premium lifestyle brands as an outperformer is not a surprise. And direct to consumer, which I also mentioned, is really the up and coming channel in the consumer space. The best performer has been Hims and Hers Health, which again was up big through July, although it's giving some of that back in August. Also in here is a stock that we actually follow at WTR, which is Herbalife, and they've had a pretty good year. It's up 37% through July. And we, because we follow it, we do have a lot of content on our website. It's watertowerresearch.com. So I would urge people to do a little bit more digging if they on our content on our website if they want to learn more about Herbalife. Conversely, and not surprisingly, apparel and accessories is our worst performing sub-index this year. It's down 31% through July. This is comprised of a 10% decline in prospective earnings and a 3.3x contraction in its prospective PE ratio. The PE ratio now is standing at 10.8x, 10.8 times 12-month prospective earnings. This is the lowest valuation applied to any of our sub-indexes, and it's not surprising the performance and the valuation given all the tariff talk.
All makes perfect sense. I noticed that there's also some foreign currency work in the Consumer Monthly Report, Doug. What impact has foreign currency translation had on the sector of late?
Well, yeah, consumer companies tend to be global, particularly the larger ones. They're very global in nature. I mean, I mentioned we follow Herbalife, and Herbalife gets 80% of its sales outside the US. So currency impacts dollar reported results and sometimes meaningfully. The message that we're coming out with here in our work is that currency is looks like it's going to swing from being a headwind in recent quarters to being a tailwind. And that could begin as soon as this quarter, the third quarter here in 2025. So that's what we're looking for, a change on that front, particularly for companies exposed to Europe and Latin America. Asian currencies are turning less favorable versus the dollar. We look at a couple currency ETFs just to get a broader lay of the land. I mean, we look at over a dozen specific currencies relative to the companies we follow, but just looking at the currency ETFs, coming into the year, developed market currencies were down 5% versus the dollar, and developing market currencies were down 3% versus the dollar. This is coming into 2025, and that's the outlook for the first quarter. By the fourth quarter, where we are today, it looks like developed market currencies are now up 7% versus the dollar, and developing market currencies are up 3%. So that's a fairly sizable swing that's going on there. And I'm not 100% sure investors are totally aware of that.
Hard to believe there's only 4 more months remaining in 2025, which also means you have 4 more reports yet to publish in 25. What do you think will likely be the main talking points in the industry sector for the remainder of the year, Doug?
Yeah, there's a lot of noise and cross currents out there with the global macro pressures and consumer spending. So I think the three things that we'll continue to focus on is that continued bifurcation of the consumer. Is the low end consumer continuing to get squeezed? And at what point will the high end consumer finally feel it and not spend as robustly as they've been spending? And then we still have the inflation picture is still a wild card. We don't really know how inflation is going to go through the system with the tariffs, and will it continue to be borne by the companies, or will it ultimately be passed on to consumers like most people expect? And lastly, we've been keeping an eye on a lot of commentary about inventory pre-purchases, a lot of pre-buys, just a lot of inventory moving out of a normal cycle because of these anticipated tariffs. So if that could be borrowing from future quarters. So I'm just kind of keeping an eye on future quarters on how this inventory imbalance gets rebalanced.
Great. Very helpful to hear your insights, Doug Lane, on the consumer sector. Also, a special thanks to the producer and editor of the podcast, Joe Brunetto. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to read Doug's consumer equity research reports, as well as to access countless other small cap equity research reports, podcasts, fireside chats, and conference schedules from Water Tower Research. We will see you next time for another edition of the WTR Small Cap Spotlight podcast.